Hello everybody. So today you're going to come with me on my debrief and we're going to look at two trades that I made, one in the EuroStoxx and one in the S&P. One worked out and the other didn't, and I used the same access in both, so we're just going to dig into that a little bit and figure out what works, what doesn't, and what price action to look for. So the first trade we're looking at is the EuroStoxx. Now the way I saw it was that the market had left this kind of no excess high and then had made this flag also really with no excess. This is a cash buying tail, and so yesterday the market had a big liquidation, found a buying tail, got picked up, failed into the afternoon, which was month-end selling. And then overnight it bid back up and then opened here with a tight IB. What I was thinking here was that the selling yesterday is like a bit mechanical because it's into month end. And then I thought, okay, so if we get a bid here, I'm going to give it the benefit of the doubt that this market could find a buyer and then rip higher with this sort of as my minimum target, you know, potentially going up here. So what we're going to look at now is just the price action. The EuroStoxx is the second ladder from the left, and it had a tight IB and we're just before the cash open at 8 AM. So what we're going to see in just a moment is that the market bids up, flicks the high, or like pays up to the high, and you can see already that there's like quite a fast transaction pace. There's lots of large clips going through, and what we're about to see is the market push through the high. Again, what I just mentioned, like the frequency of these clips and the intensity on the ladder was enough to make me believe in this. You know, the small IB suggests that we can have a directional move. Now you can see here that the market's trading up and holding bid at the highs. Any selling that comes in sort of absorbed on the high, on the bids, right at the high price. The market's pushing higher, paying up with size into the highs, and then any rotations back are being absorbed kind of on the first couple of prices. You can see now here the market, there's a little bit of selling coming in. It's absorbed at sort of from sort of 80s up to 82s. You can see immediately the market sort of just bids back into any selling, and so now the market's going to start paying up into the highs again, and we're getting this very, very aggressive price action. This is great, price action for a break-even initial balance. It's got that energy, the size, the volumes, just everything's great. The second trade we're going to look at is in the S&P. So the market's quite clearly bullish with pretty much one time framing. This is cash handle profiles. It's left a gap. There's some quite blocky profiles in here, and then at the very highs there's these 2 days. They're very balanced tails at both the highs and the lows, and so that's not really bullish setup at the highs. And so what I was thinking here was then, okay, if the market, because the overnight inventory, the overnight trades long at the highs, that if that failed, we got a drive, then we could potentially test a bit lower. Now that's not what happened, as we're about to see. Okay, now this time I've swapped my ladders around. So SPO is where the EuroStoxx was, which is second from the left. So we're just before the cash open. Let's just look at what's different. So just a couple seconds off, I think I entered just on the 59, and you can see immediately the market's bid. Now I was looking to go short here as I described before, and so we've got size here that's being absorbed. I think it's like, the sort of high 40, 94s, 95s, and we get some selling now. A couple of hundred lots, multiple 100-lot clips absorbed there at 93.5. Now the market's bidding again. And so we had quite a lot of absorption again, like, in that 94s before. But what we're seeing now is we're seeing like the buyers hold, lots of size going. Now the market bid, again there's like size into 95s, now through 95.5, and the market's continuing higher. So the market did offer back through the open. It's like pushed above, absorbed, back below. There was some sizes all absorbed on one price. The market then bid, size kept coming in, and it drove high. So that wasn't what I wanted to see.